Imagine if you could wipe away your debts and start making a salary passively. Now, meet Mark. He is 28 and an exhausted accountant who is barely making rent. He's been grinding for years and finally managed to save $10,000. That's all he has. No backup, no help, and definitely no time. Because lately, everything's falling apart. His emergency fund? Gone. His debt? Growing faster than he can repay it. And just last week, his landlord raised the rent. Again. But Mark is not giving up and he has one shot left. One decision that could either save him or break him completely. He's putting his entire savings of $10,000 into dividend investing, hoping to create a stream of passive income that can keep him afloat, get him out of debt, and maybe, just maybe, help him breathe again. This video will walk through the 7 dividend strategies Mark is choosing from, ranked from safest to riskiest. And in the end, we'll show you the boldest strategy of all, the one that just might pay for Mark's dream vacation to Paris. If you've ever felt stuck, stressed, or desperate for a way out, you're going to want to watch this. Part 1. The Foundation, Safe and Steady. Dividend Investing. Mark knows he can't afford to gamble with his $10,000. This isn't just savings, it's survival money. So his first step into dividend investing? It's all about one thing: security. He starts with dividend-paying stocks from companies that have stood the test of time. Think Coca-Cola, Johnson & Johnson, Procter & Gamble. Names you trust, brands you see every day. These companies have not only paid dividends, for decades, they've increased them year after year. That means every dollar Mark invests today has the potential to pay him more tomorrow. Not just once, over and over again. But here's what really gets his attention. Dividend aristocrats. These are the elite, the companies that have raised their payouts for 25 years straight. Mark realizes this isn't just about getting paid. It's about building momentum. It's the start of a snowball that rolls bigger every quarter. One day, it could cover his rent, maybe his groceries, even build a real emergency fund so he can stop living check to check. The only catch? Time. The earlier he starts, the faster that snowball grows. And Mark's not wasting another second, because this isn't just investing. It's reclaiming control. One dividend at a time. Part 2. Leveling up. Bigger dividends, faster growth. After locking in safe, steady dividend stocks, Mark's ready for the next move. More income, less effort. He doesn't want to spend hours analyzing individual stocks. He just wants results, fast. And that's where dividend ETFs change the game. Mark grabs his phone and dives into SPHD, the Invesco S&500 High Dividend Low Volatility ETF. Sounds complex, but here's the deal. It holds 50 of the highest-paying, most stable stocks in the S&P 500. That means Mark's getting big yields without crazy price swings. Right now, SPHD is paying over 4% annually. That's more than $400 a year on a $10,000 investment. And he didn't have to pick a single stock. But Mark's just warming up. He adds VYM, the Vanguard High Dividend Yield ETF. This monster holds over 400 dividend-paying companies. It's like having a diversified dividend army working for him 24/7. Now his money's working harder, and he's stressing less. But Mark's not done. He's about to dial it up with more aggressive strategies, bigger yields, higher returns, and yes, a little more risk. Part 3. Unlocking the power of real estate without buying property. Mark always thought real estate was out of reach. Too expensive, too complicated, too much stress. He didn't want to deal with tenants, broken faucets, or six-figure loans. But then he found the cheat code. Real estate investment trusts, better known as REITs. REITs let you invest in income-generating real estate. Shopping malls, apartment buildings, office towers, without ever owning a single brick. They trade like stocks, pay out like rental properties, and most importantly, they're legally required to pay 90% or more of their profits to investors like Mark. That's cash. Real, recurring cash, hitting his account every quarter. Mark dives into top REITs like Simon Property Group, Realty Income, and Digital Realty Trust. Some of these are offering yields of 5 to 6%, which means $500 to $600 per year on just a $10,000 investment. No mortgage, no maintenance, just mailbox money. But here's the kicker. If Mark takes those dividends and reinvests them, he's not just getting income, he's stacking ownership. More shares equals more dividends equals even more shares. It's the dividend snowball effect, but with real estate muscle behind it. And Mark's just getting started. In the next part, we're turning up the heat. Because now it's time to talk high-yield investments, the kind that could supercharge his passive income and bring his dream of financial freedom way closer than he ever imagined. Part 4, Supercharged Income. Bigger rewards, bigger risks. By now, Mark's got a steady flow of dividend income from blue-chip stocks and REITs. But steady isn't enough. Not when the rent's rising, the debt piling up, and Paris is calling. So he decides to crank things up a notch with high-yield dividend stocks, the kind of investments that don't whisper passive income. They scream it. First up, Pfizer, ticker symbol PFE. This healthcare giant might not be flashy, but it delivers exactly what dividend investors crave: consistency. With a dividend yield around 6.2%, Pfizer offers a solid payout backed by decades of pharmaceutical innovation. That's about $1.68 per share, paid out quarterly. It's not just a pandemic play. Pfizer has a diverse pipeline, strong cash flow, and over a decade of uninterrupted dividend growth. If you're building your portfolio for income without compromising your values, Pfizer is a strong contender. Next, he looks at Energy Transfer, a giant in the oil and gas pipeline game. This one's throwing off a dividend yield near 9.75%. That's $975 a year, just for owning shares. Their business is infrastructure, transporting energy, not drilling for it, which means more stability and fewer price shocks. These stocks are high yield, high risk, no doubt. They're not as predictable as Coca-Cola or Johnson & Johnson, but Mark's not putting his entire portfolio into them. He's using them as dividend accelerators to generate more income faster, while still balancing with safer picks. And here's where the magic happens. By reinvesting these fat dividends, Mark turns passive income into compounding growth. He's buying more shares every quarter, which means bigger payouts the next time around. The snowball is rolling, and it's getting massive. Now, if that sounds bold, just wait. Because in the next part, Mark goes all in. The riskiest, but most rewarding strategy is next. And for him, it might just be the ticket to Paris. Part 5. The riskiest strategies. Big wins or big losses. Mark's been smart so far, balancing safe dividend stocks with high-yield plays. But now, with bills stacking up and time running out, he needs to supercharge his income. That's where the boldest strategy comes in. Ultra-high-yield dividend stocks. These are the heavy hitters, the kind that pay out so much, they almost feel too good to be true. Enter Annaly Capital Management, ticker symbol NLY. It's a real estate investment trust that focuses on mortgage-backed securities. And here's the kicker. As of now, Annaly is paying a dividend yield of over 13%. That's right, 13%. If Mark throws in $10,000, he's looking at a whopping $1,356 in annual income, just from this one stock. But hold on, this isn't a set-it-and-forget-it play. High-yield stocks like Annaly come with risks. Dividends can be slashed. prices can swing. That's why Mark doesn't go all in on this one stock. Instead, he uses it as a dividend booster, part of a broader strategy. He watches it closely, reinvests the earnings, and stays ready to pivot if needed. And here's the real secret. When you combine this kind of income with the compounding power of reinvestment, your growth explodes. Mark's now pulling in serious cash, enough to chip away at debt, pad his emergency fund, and yes, start mapping out that dream trip to Paris. But is it enough to live off dividends full-time? That's the question we'll answer next. Because Mark's not just looking for quick wins, he wants permanent freedom. And in the next part, we'll show exactly what it takes to retire on dividends forever. Part 6. Can Mark leave off dividends forever? Mark has explored every strategy, from the safest dividend stocks to the high-risk, high-reward plays. But now comes the real question. Can he actually quit his job and live completely off dividends? Or was this all just a dream? Mark's journey started with $10,000 and a mountain of stress. But now, after working his way through steady stocks, strategic ETFs, high-yield REITs, and bold dividend bets, he's ready to answer the ultimate question. Can you actually live off dividends? The answer is yes, but only if you play it right. Let's run the numbers. If Mark keeps reinvesting, keeps diversifying, and keeps adding even small amounts to his portfolio, that income snowball starts turning into an avalanche. Let's say he builds his portfolio to $500,000 with an average dividend yield of 6%. That's $30,000 a year in passive income. No boss, no overtime, no trading time for money. The secret? Start early. Dividend investing isn't a get-rich-quick scheme. It's a stay-rich strategy. If you've made it this far, I have a powerful dividend investing guide designed just for you, and it's completely free. This guide includes a checklist of high-yield dividend stocks, a breakdown of safe versus risky strategies, and even a dividend reinvestment tracker to help you grow your passive income faster. All you need to do is comment "dividends" on this video. Once we reach 50 comments, I'll share the link for everyone to download. Now that you've seen how much dividend income you can earn from $10,000, imagine getting paid every single month, enough to cover your rent. In the next video, I'll show you 5 powerful monthly dividend stocks that can create a steady cash flow, so you never have to stress about rent again. Click on the video now and start building your monthly passive income.